Hey, it's Ryan Gillard here at Real Broker, your Calgary Realtor, and in this video I'll go over the monthly market stats for October. And we had 2,174 sales. This number is actually bigger than September, and which is a good sign. And we're actually a bit flat if you look at the year over year. We're up 0.2% compared to last year's October, but we're still 24% higher than long-term averages. So this was still a great October. Our market's still very good in Calgary. And this number could be a lot higher if there were more options in the low to mid-range price points. That's just not the case at the moment. And if we look at inventory, half of all the properties in Calgary now are priced over $600,000. So it's become an expensive city. That's a lot of money for a lot of people. And not everyone can afford that. That's why the sales, they could be a lot higher, but they're not. There just isn't that many options in the low to mid-range price points. So now, in terms of inventory, I think it's a tale of two different price points. If we look at everything under, say, $700,000, if you have a good property, it's priced well in a good area, it can still be a seller's market under that $700,000. There's only 2 months of supply under $700K, but if you look at properties over $1 million, now there are 3 months of supply and climbing, and that's becoming a more of a balanced market. We're still not nowhere near a buyer's market in Calgary, but some areas it's seller's market, some areas it is a balanced market. So let's summarize here. So sales, 2174, up 0.2%. I already covered that. New listings, they're up 21.6% year over year to 3,264 listings were taken in October. Now this is an improvement. I think last month, it was like 50% year over year. It was a bit scary. So not quite as scary. Maybe it's leveling off. It's hard to say. Our inventory up 54.9% year over year. That's a lot. So right now we're closing on 5,000 active listings. This time last year it was like 2,000, 2,500 or so. So our inventory is way up. Months of supply. Again, this is the stat where if nobody could list a property for sale, it would take 2.28 months to sell the remaining inventory on the market. Year over year, up 54.6%. And one thing to point out, if you're looking at the inventory and the months of supply and how much it's gone up 55% over last year, that looks scary on the surface. But if we look at it logically, we're comparing this number to all-time record lows of last year when it was a sizzling market and there was no inventory whatsoever. There was less than 1 month of supply in many areas of the city. So to go from that to having maybe 2 months of supply, 2 to 3 months, is actually pretty good. These are still excellent market conditions, which I think is good for a lot of people. It's tough to work in those conditions. It's tough when you're a buyer because you can't find anything and you're competing for everything. It's even tough for some sellers because they want to sell and buy something else afterwards, and they're terrified that they can't find anything. So no one really benefits when the market is that crazy, unless you're selling the property and you're just cashing out and you're going somewhere else. But for most people, that's not the case. And I do think it benefits a lot of people if the market is just a bit more balanced. And if we break it down by product type, detached homes, average price $753,900, up 8.1%. Duplexes, $677, average price is up 8% over last year. Townhouses, $456,600, up 8.1%. And apartments, up 11.4% to $341,700. And the average price, all these put together, is $592,500, up 4.5% year over year. And if we look at each sector, for detached properties, it's what I mentioned earlier, that it's a bit more of a seller's market under $700,000, and then over that it's becoming a bit more balanced. For semi-detached, this market is still very strong. It's definitely a seller's market, but the trend is that we're seeing more inventory come on the market. And for townhouses, what I'll mention about this sector is that for the first time since 2021, the months of supply is over 2 months. This used to be the hottest section of Calgary, and it's still very hot, but there's actually more inventory, and it's balancing out a little bit. It's still definitely a seller's market, but the inventory is improving. And if we look at apartments, this is a bit of a tough sector to figure out right now. So we've had 5 months in a row of consecutive year-over-year sales declines. So it seems like sales are dropping off, but not really the case. If we look at the all-time record number of sales for a year, I think it was actually last year, and we're not that far off from that number. So there is still lots of sales. Most of the sales activity is happening between 300 to 500,000. But if you're lower than this, if you're lower than 300,000, there's not much inventory, and that can be a very tight sector if you're a buyer. And one thing I'm noticing when showing condos, which doesn't make much sense to me, is that the condo fees in the city have gotten out of control. I could be showing like a property for say $300,000, 2 bedrooms, 2 bathrooms, built in 2000. No crazy amenities. The condo fee just covers heat, water, professional management, and so on. And the condo fee could be like $800 a month. It doesn't make any sense at all, especially for properties that are like in the lower bracket, like a home for $250 with these crazy condo fees. That's the entire purpose of buying a condo, is it should be cheap. But our condo fees have gotten out of control. I think if it continues on like this, it should affect the prices, you think, because people add in the condo fee with taxes and their monthly mortgage payments. And if the condo fees are that high, it should translate into lower prices at some point. But I could be wrong, but that's what I'm noticing with condos, is that the fees have gotten out of control here. And next up, I'll take you on a regional breakdown. So the city center, $599, $500. A bit deceiving because most condos are in the city center, which are at lower price ranges, but there are definitely very expensive pockets of the city center. West side, $719, $600, up 5.9%. Northwest Calgary, $641, $700, up 5.1%. Then the north, south, and the southeast are typically around the same price, $585, $582, and $561 in the north. And the most affordable areas are the northeast at $519, up 7.8%. And the east side at $434, $600, up 11.5%. And next up, I'll just go over the year-over-year breakdown per category, just very briefly. So for detached properties, 1,071 sales, up 9.96%. New listings, 1,536, up 18%. Inventory is up 38% to 2,199. Months of supply, 1.63 all the way to 2.05, up 25%. And if you look at the sales to new listings ratio, so last year it was about 75%. Now it's closer to 70%. Still a seller's market. I think everything over 60% is classified as a seller's market. So that's still pretty good. Sales to list price ratio was 100% last year. Now it's 98.97%. So it's down, but it's still pretty good. And the days in the market was 27. Now it's 32. And the median price, $699, $800, up 7.68%. For condos, condos are down 12% in terms of sales, from 640 to 560. New listings are up from 728 to 922, up 26%. Inventory is also up 66%. It was 954, now it's 1593. I am noticing this. I have some condo listings, and they are definitely slow, and I think they're priced right as well. So the market is definitely shifting in some areas. Months of supply was 1.49, and now it's 2.84. Big jump, 90% jump in the months of supply for condos. That's alarming, in my opinion. Sales to new listings ratio, it was 87%. That is huge. Now it's down to 60%. That's quite a drop, down 27%. So if you are a condo seller, I'd be paying attention to some of these stats. The market could be shifting more in the buyer's favor. And sales to list price ratio, it was 99.21%, now it's 97.89%. And so I didn't explain this. So if I go back to detached properties, 100.06%, this means that you can expect to get 0.6 over list price on average. And now it's dropped down to 98.97. And in this case, it went from 99 to 97.89. Days in the market, 29. Has jumped to 35, up 21%, and the median price went from 292 to 315, up 7.69%. For duplexes, total sales 190, up 6.15%. New listings 237 to 284, up roughly 20%. Inventory is up 35% from 288 to 390. Months of supply 1.61 to 2.05, still a very low months of supply. This sector is pretty hot still. Sales to new listings ratio, 75% down to 66%. And sales to list price ratio at 99.99 to 99.35. So again, still a pretty tight, hot market. Days in the market, 25 to 28. And the median price is $623,875, up 15.53%. And lastly, the townhouse sector, total sales 353. Down 6% over last year. New listings up 25% roughly from 419 to 523. Inventory is also up a huge amount, 372 to 784, up 110%. That's a huge gain. And now this was a very tight sector, so even though we have a huge jump like that, we were still like a very, very tight market. Now it's balancing out a little bit, and you can see that in the months of supply. 0.99 was crazy. Now it's at 2.22. Which is up 124%. Sales to new listings ratio, 89.74 down to 67%, minus 22. Sales to list price ratio, 101.56%. So they were getting over list price on average, has dropped to 98.71%. And the days in the market has jumped from 23 to 31. And the median price from 419 to 437, up 4.18%. Now, if you're a seller, what does this mean? I would say overall, if you look at the trends, it seems to be leveling out from the hardcore seller's market to more of a balanced market. And you can see it right here in most of these metrics. If we look at the townhouse sector, the sales are down, the inventory is up, the months of supply is way up in some cases. The sales to new listings ratio is down, sales to list price ratio is down, days in the market is going up. All of these metrics are telling me that the market is not favoring the seller as much as it used to be. It's not favoring the buyer yet, but just going from a seller's market to more of a balanced market. So if you were trying to time the market to cash out, now could be a great time. I don't anticipate the market's going to take off again, but I could be wrong. There are some upcoming changes that might benefit the buyer, and they might jump into the market, and that could change things. So no one knows. No one has a crystal ball. It's like predicting the stock market. So what does this mean if you're a buyer? Well, I think the days of our extreme tight seller's market conditions are probably coming to an end and the market's balancing out. That makes it easier for a buyer. There's more inventory to choose from. The rates have come down. The latest rate drop was from 4.25 to 3.75%. I didn't anticipate that much of a drop, and it sounds like they might drop the rates again. So it's becoming a bit easier for a buyer. Now, the one thing that I would point out, two things, is I would not be waiting for the spring market to make your buying decision. That's a very common philosophy to have in Canada. Don't do that in Calgary. If you did it the past few years, odds are you overpaid for the property and your life was way more difficult than it had to be. That's the hardest time of the year to buy a property. I would get in front of that if I was a buyer. And I'd also make a note of a lot of buyers on the sidelines right now waiting for these rate drops and stuff like that. And the mortgage rules are changing on December 15th. You can get the 30-year mortgage again, and the insurance cap is going up. So a lot of buyers are waiting for things like this. And if you wait too long for the obvious news and indicators, it might be too late. And I don't think it'll take much to push our market back into a seller's market. So no one has a crystal ball. And if the rates keep dropping and more buyers jump in, that could change our market in favor of the seller again. So nobody knows what will happen, but as a buyer, I'd rather get in front of that and buy right away versus waiting for the spring market. Well, that's my rundown. I hope you enjoyed it, and I'll see you on the next video.